Hi, David Basnese here, Chief Economist at BetaShares. This is a snapshot of my latest market trends report. And the month just passed for October. Look, another good month for equity markets generally around the world. We had the S&P 500 up 2%. We had the markets in Europe and Japan up between 4 and 7%. The Australian market was a bit of a laggard. It was only up 0.4%. In other markets, we had bond yields pretty steady. US 10-year bond yields easing just a little. Now they're just hovering just above 4%. US dollar a little firmer and the Aussie dollar a little weaker, ending the month around 65 and a half cents. Now, some of the key developments through the month. Firstly, the US earnings reporting season for the September quarter has been pretty good. I mean, the beat rate in terms of companies beating earnings expectations have been above the long run average. The Mag 7 companies are still continuing to beat expectations, and they've had generally speaking pretty good share market reactions to their reports. That's been positive. Another positive in the United States was the September CPI came in a little bit lower than expected. Core prices only up 0.2%. The market was expecting 0.3. Meanwhile, we're flying blind a little bit in terms of other economic data in the US. The US government is shut down, so the statistical agency there is not putting out the normal set of reports. So one concern at the moment is we don't know whether the labour market is weakening a lot more. Employment growth in the US has slowed in recent months, but we haven't yet to get another payroll update. So that is, a risk factor for the months ahead. But the inflation numbers were good. The earnings numbers have been good, and the US Federal Reserve followed through with that widely held expectation and cut interest rates again at the end of the month. Other news around the world: in Japan, some optimism. We had a change of leadership in the LDP, and they formed a new coalition. So we've got a new prime minister in Japan, the first female prime minister in history. Markets like her because she has historically said she's favouring more fiscal stimulus, likes to, she's promoting stronger Japanese growth. So we saw the Japanese market perform particularly well through October as well. In terms of general trends globally, look, growth generally is still beating value. The Nasdaq is still doing pretty well on the back of those still good performance of large cap tech companies. But it's not just the US doing well. Other markets, as I mentioned, Europe and Japan are doing well. Other sectors like financials are also doing well. In terms of Australia, as I said, it was a little bit disappointing. Our market was only up 0.4%. Interestingly, coming at a time when earnings upgrades are starting to come through in our market, in the resources sector in particular. So earnings outlook is starting to improve in Australia, but the market, at least in October, was a little bit of a laggard. Now, one of the factors there, I think, was the disappointing inflation numbers. We got the September quarter CPI that came out that was higher than expected. The trim mean measure of inflation up 1% in the quarter, and effectively markets have given up on the idea that the RBA will cut rates at the November policy meeting. So that's been a bit of a disappointment for the markets. And also within the Australian market is interesting. We are seeing some rotation taking place. So we're seeing a rotation from the financial sector toward the resources sector on the back of the upgrades that we're seeing in the resources sector. So that's in the large cap space. And also the small caps are showing good performance in recent months. So we're seeing, small caps after a long while of being in the doldrums starting to outperform large caps just in the last few months. That's pretty much it for now. The full report is available as usual on the insight section of our website. Thanks for watching, and I'll see you again next month.